have Abhay Agarwal, who's joining us now on the show from Piper Serica to discuss about numbers. Abhay, it is a vibrant market, and fund managers like you must be smiling as they walk every day to their office that their portfolio is doing well and in good shape. But that makes your job even more tougher, right? To look for attractive risk reward in a vibrant market, areas which people are missing out on, are not ready to even look at, where all the negatives are factored in. Are you also looking for these kind of areas or hunting for value in these kind of areas?
Yeah, good morning, Ajay. The amazing thing is that you think like a fund manager, so it is easy to have a conversation with you, and you have put your hand on the pulse, because while as managers, we are happy to see the portfolios perform and, new money comes in. The challenge always is that, in a market which is at close to all-time highs, and some of the stocks have delivered phenomenal returns over last 4 months, I would say, from April 1. You have to keep looking for new opportunities also to boost long-term returns. And as markets go up, those opportunities become more and more scarce. But as fund managers, we can't stop. So, again, with the disclaimer that some of the stocks that I may mention, are not buy recommendations or not sell recommendations, and we may have interest in them. So we are looking, Ajay, as you said, at spaces that haven't performed, or where investors are not yet looking at bottom of the cycle, both in terms of performance and also valuations. And some of those are related to, industries like agrochemicals, fertilizers, specialty chemical exports. Some of our exporters who are very good manufacturers have had a tough time, but now seem to be getting their act together. And also in innovation tech companies, companies that are using innovative technologies to get to international markets. So I think these are some of the places where we are hunting for what we call buying growth at value prices.
Let's talk about, one of the areas where negative news flow is just not stopping, which is chemicals, agrochemicals, specialty chemicals. The latest one being SRF, which cut guidance, but before that, FMC, the global peer of UPL, actually cut guidance, BASF cut guidance, Sharda Cropchem in India cut guidance 4 months back. It is also kind of getting complete shunning of the market. Are you looking for value there? Why? If yes, do you think that this is definitely a hunting ground?
No, Ajay, this is definitely a hunting ground, and we have been looking at this sector for 2-3 years. For a long period of time, I thought that it is overpriced because of too much of investor participation, and there were certain broad themes which will play out in the long term for sure, like China Plus One and efficient manufacturing, specialty chemical manufacturing. But I think these stocks, a lot of them ran too far ahead, and I think the management also kind of guided or raised expectations that have not been met. But I think now we are at a level where the inventory, when we talk to some of their global customers, we see that inventories are still at a very high level, especially on more commodity specialty chemicals, if I can use that word. Side inventories are still very high, and that is one of the reasons that the performance over the last 2-3 quarters hasn't been good. But now we are seeing those inventory levels gradually come down, and our bet is that over the next 12 months, we will see inventories come down with the customers, and that will drive the new order cycle. The good thing is that the companies that you mentioned, and there are many more in that space, are very efficient manufacturers. They're very lean manufacturers, very cost competitive. Now it is just a matter of getting bigger orders from their international customers. So I think we are at the cusp of that. I think another 2-3 quarters we will see better volume data from these players. And also the good thing what is playing out in their favor is that globally the agri-commodity prices have started to go up. Look at wheat, rice, which will make it more remunerative for ultimately the farmers to use these products on the fertilizer and agro side, and especially on the specialty chemical side also. So I think we are seeing value emerge, but again, the risk always is you are too early in the trade. So we are doing our research. We find it an interesting space to look at for sure.
Totally. As they say that you have to get in early, even if either you have to make do with the discomfort of getting early and see your portfolio go down another 10, 15, 20%, or you have to make do with the discomfort of chasing a rally because everybody now realizes it and you are behind the curve. So there's always trade-offs, isn't it? But you are ahead of the curve even in textile, right? Just a couple of months back, textile stocks, even though cotton prices were low, were getting pummeled because of low demand kind of hypothesis being built in the West. You started building your textile position in exporters as well as the domestic textile guys. How are they panning out now?
Ajay, absolutely, we see that international inventory levels have come down dramatically. For 3 quarters, there was very muted buying from European and American chains, brands because of a situation where they had very large inventory. But now those inventory levels have come down, and as a result, the manufacturers in India who export are getting good orders. And what has really helped with the margin side is that the cotton prices are probably at their lowest in last couple of years, and that has really helped. Over 1 year basis, I think the prices are down almost 40%. So that is helping the margins. The dark horse is, that if and when the FTA gets signed, which will further make them further competitive, but we don't know when that will be. So I think that thesis is playing out well. I don't think these stocks are very expensive. Some of them are trading at 1,000 to 2,000 to 3,000 crore market cap, very profitable companies with very lean balance sheet. Again, an area with very low participation ignored by investors, which suits us fine. Domestic apparels, we have not yet made a bet on, but we are always looking because again, these are commodities, Ajay, that cannot be disrupted by any kind of artificial intelligence or any other technology that may come in. People still have to wear their basic clothes. So that is, something that gives us a lot of confidence that as long as we back the right companies, we will make money.
Okay, you must have also observed the guidance hiking move by five-star business finance this time. The stock opened 10% higher, but still in the gains. The MSME or lower income kind of businesses or strata are showing very high credit growth. You have worked on some of these ideas before. What was your reading of this, Abhay?
I think, Ajay, for next 2 years, we are going to be in an amazing space for these companies. They are still small companies, but they have phenomenal ground level franchise. We talked about five-star. We don't have it in the portfolio, but we have looked at it and we have a lot of peers that we have in the portfolio. I think anybody who is lending to MSME, SMEs, and this is beyond microfinance. Microfinance model is still predicated on joint lending growth. So that will stay, that will grow. But now you are going down and building a franchise, lending with ticket size of 1 lakh, 2 lakh rupees to unsecured lending to a very wide SME, MSME zone, where the cost of borrowing from traditional channels for these businesses was very high. And these are short-term loans because these are cyclical. They're 3 months, 6-month loan when these guys need money and then they pay back. So as long as you can control your credit cost, you have done your good credit processes, and you are using technology to grow your business. I think this is a business for next 10 years in India. And I think like five-star, there will be more business come up. Banks are not able to do this, Ajay. You would expect banks to do that, but banks are not set up to do this. So they are happy to actually acquire the portfolios of businesses like five-star and pay them a hands-up price, which leaves enough on the table for these aggregators. So I think this is microfinance, SME lending, unsecured lending of any kind with good credit standards. I think is a fantastic business for next 2 to 5 years for sure.
Right. A quick word, Abhay, on what's happening globally. China manufacturing data came in pretty healthy. US, the data on the earnings front, data on Q2 GDP came in pretty healthy. Does it appear to you that we may not be, heading for a crash landing in global economy, particularly US?
Yes, Ajay, US is a very difficult country to call on because, people always get it right whether they're bullish or bearish. Because things move very fast and the country and the economy auto repairs itself also very fast because it's a very open economy, not as regulated as some of the other countries, especially China. So I think the good thing about US is it auto repairs very well. Any excess goes out very quickly. And the data that we are seeing, especially the earnings upgrades that we have seen recently, or from tech companies, from financial services companies, banks, large banks, JP Morgan, Citibank, Apple, Meta are very positive. So that shows that domestic economy is very strong. China, I think they are going to go through a cycle of heavy fiscal stimulus starting anytime now, and which will shore up the Chinese markets also. So if US and China both fire for next 12 months in terms of domestic consumption, and large markets like India also kind of stay healthy, then I think we are setting us up for a nice global rally for next 6 to 12 months, driven by very healthy consumption demand.
All right, Abhay, we'll let you go on that one. Always wonderful to chat with you. That